Hello everybody and welcome to an exclusive Blackwell Global video on the exclusive Blackwell Global Indicators presented by myself, Malte Kaup, and Paul Wallace, a very experienced trader and coach. He's on the line as well. Before we go into the topic, let me share with you the risk disclaimer. Forex and CFDs are leveraged products and involve a high level of risk and can result in a loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. Or alternatively, if you have any questions, just reach out to your Blackwell representative and we'll be very happy to help you with that. Today in this video, we want to discuss the exclusive indicators that are available only through Blackwell in their MetaTrader 4 platform. That means that you can't get them anywhere else. So if you would want to export the indicators to another MetaTrader 4 platform, they would not work there. So they come as a package exclusive to Blackwell trading. They represent quite well-known popular trading concepts that work quite well in different trading environments, and Paul and I will give you a quick overview of that in the course of this video and help you to identify potential trading setups in real time. Obviously, you have to make the trading decision yourself. They're fully customizable, so some of these setups or patterns you can distinguish how sensitive the indicator should be. You can change the settings there, and there are a really good addition to the MetaTrader 4 suite of indicators that comes pre-packaged with the platform. First of all, where can you find those indicators? After you received the email from Blackwell with a link to download the MetaTrader platform with your login details, you can then just download the platform, install it on your hard drive, and all you have to do then is you have to go to Insert, Indicators, and you will find the customized indicators in the custom section, and they also all have a name and a version number 4 attached to it. So the 4 indicators are Long Wick version 4, Pin Bar version 4, Spring version 4, and Hammer and Hanging Man version 4. So quite easy to find, and the way you attach them to the chart is also not a problem at all. So you just open a chart, you go to indicators and attach them, or you go to the navigator list that's open here on the left of the screenshot and just drag and drop the indicator onto the chart. But I'm very happy to show that to you once we've moved over to the MetaTrader 4 platform again. Let's just start with one of the indicators called the Spring indicator, and Paul has kindly written a little bit of an explanation to the Spring indicator. Maybe at this point, Paul, if you could come in, just talk a little bit about Spring indicator while I then also move over to the MetaTrader platform and we show the Spring indicator and platform and discuss how it can be used in the context of a trading setup.
Sure, Malte. Yeah, thanks very much, and good evening, everybody. It's Paul Wallace here. So, Spring indicators, Malte said, is one of the exclusive Blackwell indicators, and in particular, the Spring indicator will be of particular interest to individuals or traders who are interested in trading, who are range traders. They're looking to sort of trade the elements of periods of consolidation in the markets. As most of you who are experienced traders will know, the trades, or rather instruments, only trend for about 20 to 30% of the time. The rest of the time, they're normally in a period of consolidation, and some people like to be able to trade those periods and look to trade, let's say, like the edges of those periods of consolidation. So with that in mind, the Spring indicator gives you a little bit of an indication of, as the name implies, a possible spring, namely that when an instrument tests either a recent low or a recent high, and then it basically reverses and bounces quickly back into the trading range. Well, when a market does that, and it really doesn't matter about the sort of the time frame or the instrument, all instruments sort of will demonstrate demonstrate that kind of behavior. That in itself provides a trading opportunity. And so, we can, for the prepared trader, that provides opportunity. It's rare that it's a perfect retest. I think anyone who's traded for a while will know there's no perfection in trading, but being able to be given a slight heads up or a slight hint of when an instrument may reverse and bounce back into its trading range can provide range traders with an opportunity to sort of take a trade back into the range. Some people would call mean reversion, others would be calling it range trading, depending upon let's say depending upon the trajectory of the instrument in place.
Yes, thank you very much, Paul, for that. I just switched over to the MetaTrader 4 platform just to visualize what you've been talking about. So we have the spring indicator here attached to the USD JPY chart on a monthly level, but obviously that works on on other time frames as well. So in terms of previous support and resistance, I think what we can all agree on is that this area here on the left hand side looks like an area that has been tested as support and has been retested here again, and the spring indicator helps us to pinpoint and identify these areas. And but again, I think it's also quite clear that the indicator alone is not a recipe for success. Once this level has been tested a couple of times and broken here quite clearly, actually the sentiment in the market shifted, and also the indicator shifted, right? So what has been tested as previous support then eventually becomes resistance, and the market moves downwards until it comes back actually to test this resistance, breaks it again, and what was resistant becomes support, and the indicator then flips on the other side. I suppose it's a helpful instrument when you're looking for simple support and resistance level. It alone will not allow you to trade successfully, but it will enable you to better identify these kind of areas of support and resistance. So maybe let's moving on to the other indicators that are available. There are three more. One is called the pin bar, the other one is the long wick, and the third one is the hammer and the hanging man. So so maybe starting with the pin bar indicator, and in a moment, Paul, I would really love to get your perspective on that, knowing that you are a real pin bar expert for quite some time. Just in terms of attaching the indicator to this chart, I have downloaded the MetaTrader platform from Blackwell, and you can now see it in this navigator section, which you can also get by clicking on View Navigator, or alternatively just press Ctrl N on your keyboard. It will populate this list here on the left with all the available indicators, and you find it here under the indicator section. If you can't find it, the easiest way to make it visible is probably just to close down MetaTrader and restart it again. Or if you click or right click in this list and click on refresh, it will then look in the folder on your hard drive where all the indicators are stored, and populate the indicator for you to use. And all you then need to do is click on the indicator, drag it onto the chart, and release the button, and then you have attached the indicator to the chart, and you can change the setting. I'll come back to changing the settings in a moment, but maybe Paul would really love to hear from your great expertise on the pin bars and how you use them in your trading strategies, and what makes them so helpful.
No problem at all. Happy to talk about pin bars, Malta. They're a pretty well-known trading concept, and plenty of traders will use a pin bar to help them as almost like a trading trigger. Why did it called pin bars? Well, a lot of it is to do with the character Pinocchio that some of you may remember from sort of childhood fables, and for those of you who can remember that far back, will remember that when Pinocchio ever told lies, his nose would get bigger and bigger, and in many ways, a pin bar on a chart is like that, is that it's trying to lie to you. Invariably, the way the pin bar affects, it might sort of trick people into to thinking that the market is going to continue in that direction, but actually, it's, as I said, it's deceiving you, because the most likely direction is the exact opposite. And so once we're able to see and identify and understand that sort of sentiment in the market, then we can use that to give us an indication of a higher probability trade direction for well, let's say for the next couple of sessions, depending upon whether that's a 5-minute chart or whether that's the daily chart. So invariably, when we see a pin bar, we normally see a bar that has a very, very small body, normally towards towards the end, either end of the candlestick, and we normally see a wick, a long wick that is ideally sort of 2 to 3 times the length of the body. Preferably, we also like to see a pin bar that sort of stands out from the crowd. Okay, the actual candlestick itself, or sort of almost the very good ones, will kind of leap off the chart towards you, and we also like to see it happen at let's say at those zones of support and resistance, a little bit like Malta was talking about there. Being able to identify that there's no perfection in terms of support and resistance levels. It's very often quite a zone, but once we see pin bars appearing at those particular zones, then that might give us an indication of the, as I said, the likely direction for the next couple of trading sessions.
Thanks for that, Paul. And as promised, let me help you get a better understanding of how this indicator actually work. As you can see on this chart of the euro-US dollar daily, it has not picked up on all pin bars here on the chart that you would be able to spot here, and that is dependent on the configuration of the indicator. So a pin bar always is a combination of the length of the wick and the length of the body of the candle in comparison as two of the main parameters. And these are parameters you can play around with. What I'm doing now is I press Control I on the keyboard, and that just gives you an understanding of all the indicators that have been attached to this chart. In this case, I've only attached the pin bar indicator. So if I click on this indicator and edit, it will allow me to play around with the input settings. So you could say, like, for example, the tail of the wick needs to be at least a certain number of pips. This is now set to 5, but you could easily set that to a different number, to 25. And then it is looking for the minimum percentage of the body in comparison to the tail. For example, if the tail is, let's say, it's just for argument's sake, let's say 100, we will hardly find a 100 pip wick, but it's probably easier then to understand how the proportions work. And you say the body to tail percentage is 30, then in that case 30% of that 100 would be the required size of the body, and and the same applies here then in the minimum percentage for the body to the tail from a nose perspective. So let's just reset that to, let's say, something like 30. You can also change the colors here, and if you want to have a stronger arrow, you can increase that size to a different size, 3 for example, and that will then deliver a slightly different version of a candle or of this arrow that is being drawn. You can also play around with colors. Visualization, that in general is always the question, on which charts do you want to show that specific indicator. And here I've attached it to all time frames. That's also the standard setting. But if you only desire to show that, for example, on the daily chart, you can do so by only selecting the daily chart. And if you change the time frame to any other chart, it will not it will not appear there. So you can see that the only changes are really made to this indicator in this case was I've changed the arrow width from 1 to 3, and the arrow has just become a much wider one, right? And makes it more visible on the chart. Again, I think just to reiterate also what Paul has said, the pin bar is a really nice confirmation often of a strategy, of a setup where you want to get some additional confirmation that the market is moving into a certain direction. That works both on a bearish as well as on the bullish side. And the pin bar indicator will move in both directions. Good. Let's move on and have a look at the two other indicators, the hammer and the hanging man. Paul, what are you able to share with us on the hammer and the hanging man? I think it's a quite popular setup, or quite popular one as well.
Malta, in terms of the hammer and the hanging man, that is, they look remarkably like pin bars, and in fact, many would say that they're very, very similar to them. It's what we think of them as a hammer and the hanging man is really what the Japanese term for pin bars would be. Based upon most of this is candlestick driven setups, and those candlesticks came, for those who quick history, they came from rice traders in Japan in, I think, the 17th century, and they had all sort of manner of names. And so when we see a pin bar effectively at the end of a downtrend, okay, with the nose pointing down, that's when it's called a hammer. And invariably, when we see the sort of the same kind of the same type of setup at the end of an uptrend, that's when we're seen as a hanging man. And as you can probably imagine, sort of if you just can imagine seeing a hanging man, it is as the name implies. It looks like a sort of something that's been left hanging, and that's what interests us as traders. After a long uptrend, we're looking to see a price hanging before it runs out of energy, rolls over, and falls away. So when we see a hanging man at the end of an uptrend, then we're expecting that we may get to see prices move lower for the next session or two. And on that hammer, as when we see a hammer at the end of a downtrend, that's normally giving us an indication that we may see an uptrend. There's a higher probability of that for the next particular session or two. So they're very useful to see, but it's the important thing about all candlestick formations is all candlestick formations are reversal patterns. They're reversal patterns, so you need to find them at the ends of something to reverse. There needs to be at the end of trends. When you see them in the middle of let's say periods of consolidation, that's not always as effective. It's we need to see a trend followed by one of these patterns at the end of those trends in order to give us a higher probability. It's as Malta talked, it's like the confluence of events. We need to see two or three things happening at one particular area or place, and that is what allows us to provide to create a sort of a higher probability trade setup and a very simple trade plan to follow.
These are great points, Paul. Thanks for sharing that. And I think, as always, when you think about embedding this into your strategy, you also have to think about risk management and probabilities. So again, this alone will not be the formula for success, but when you look at it the way we've set it up right now on the daily chart, and when you think about maybe as an additional confirmation that for the following days you see a direction change or a movement in a certain direction, I think that can be quite helpful. But just if you use this example and just using this chart and this indicator, the first one, the green one, clearly when for many days we had a strong follow through on the bullish side, then the price action actually then turned a little bit to the side and then eventually downwards, and we got the first bearish hammer and hanging man here, and we didn't get a bearish follow through. And the second one, we had somewhat of a follow through, like the following day was very bearish, but then the market recovered. So again, I think out of this chart, you could easily then argue in one case you had great success, in two cases you had some kind of mixed results or negative results in the end, but in the combination that would be supportive of a positive outcome. And I think that's what trading is all about. You will never exactly hit the highs and the lows, and not every trade will be a success, but it's about using the indicators in a smart way and applying risk and money management on top of that to deliver a positive outcome. So in terms of the indicators, I think what have we covered? We've covered spring in the beginning, then we had a good conversation about pin bar. We now covered the hammer and hanging man. Let's land on the long Wick indicator. What's the long Wick indicator all
Well,
about?
it's a pretty simple explanation, Malta, in this particular case, as that what we're expecting is the indicator will identify particular candlestick patterns that provide us with a long wick. So why, I suppose, more an interesting or important question is why is this of importance to us? Why is this of any real relevance to us as traders? Well, as we said right at the start, we're interested in particular levels and trying to identify particular support and resistance zones. They are always of relevance to us as traders, but it's about how price reacts at those particular levels that starts to sort of, let's say, focus the mind in terms of finding a particular trade setup. When we see long wicks, okay, on a candle, and sometimes that can be sometimes that might be a pin bar or a hammer or a hanging man, but other times may actually just be a different sort of a candlestick pattern. What it's showing us is that there has been a rejection of that area, and that's the important thing that I'd like traders to realize and understand. Long wicks demonstrate rejection of an area, and invariably when there has been rejection of an area, and certainly on, let's say, on certain longer time frames, well then that is we need to respect that. We need to sit up, take attention, and respect that, because for a rejection to have happened, there needs to have been let's call it a big dog. All right, a big dog has came in and taken a bite of that market, whether it's the bulls at the end of a downtrend, or whether it's the bears at the end of an uptrend. A big dog or a group of big dogs have come in and taken a bite and force price away from that particular level or zone. They've forced it for price to reject that particular area or that particular level, that particular zone, and that is of real interest and real importance to us as traders, because it can give us an indication of an indication of where the real supply and demand is within the markets, and then we can start to form a small trading plan around those particular sort of signposts that of where those big dogs are hiding. And we certainly don't want to fight that. As private traders, our edge is being able to be savvy and to be able to be nimble and adaptable to what the market is telling us. And so, invariably, when we see those big long wicks, we don't want to fight them. We want to actually utilize that information to give us an indication of the higher probability direction for the next couple of trading sessions.
And it's also quite interesting to see once the market actually moves beyond such a long wick, the market actually then seems to press higher or lower if the market is moving in the other direction. So clearly indicating that there are a lot of stops in that area. Let me just randomly pick one example here on the left-hand side. You see there is this bullish wick, and once the market has broken below that level, the market actually moves a good chunk further, and it has struggled all that time here and this is a daily chart, so it has struggled to break below that level for quite a while, and the same applies to the other scenarios as well. I think the way I also like to think about all these indicators, again, they alone are not a recipe for success, but they help us to really understand the story of the market much better, to understand where stops are positioned, how other traders set themselves up, and then adapt that in line with your existing trading strategy. A lot of traders always find it hard to understand where you really should step out of a trade, where the hypothesis of a trading strategy is just wrong, and just to hang on to such a trade would be really bad, and in many cases very expensive. So just be very clear. For example, if we have this support level here that I've indicated with this horizontal line, and the market has clearly broken below a level that has been tested for quite a while as support, there is not a lot of appetite for the bulls just to step in immediately, right? It has taken a while. The market has recovered, but it has taken quite a big, what I think could be around 300 pips detour to the downside, if I'm not mistaken, 250 pips maybe to be precise. And that's just kind of an awfully long way if you're in a long position to wait 250 pips or to hope for 250 pips to recover that, and in the end to come out on the other side. That is very painful and often very expensive. And what we often see is when people hang on to their trades, and when they close them at the kind of the most unfortunate levels, see the market bounce back up again, and then run straight to the target that the trader had anticipated before. That is, as we always know, also very problematic for the emotional capital, because you don't trust yourself, you don't trust your trading strategy, and it will be very hard to become a successful trader with all these doubts that just build up over time and time again. And I think, again, the indicators can be quite helpful to understand the story of the market better than you can do alone, basically helping you to compress that learning curve in trading. So just to finish this video, just let's quickly summarize the different indicators. So maybe if we can take it in turns, Paul. If you could just take the long Wick indicator, we'll just then talk about the
absolutely.
next one.
Yeah, I'm happy to talk about the long wick indicator. It's it's a pretty self-explanatory. It's the long wick we look to see on particular candles, and we're interested in seeing those because they provide us great insight into where stops are, and in particular insight into rejection of particular levels and zones, and that can be useful for identifying areas of support resistance, but it also can give us a great insight into where the likely next direction is for the next session or two, just based upon the where we see those particular long wicks.
All right, so let me take then the pin bar indicator. The pin bar indicator, well known by many traders, looking for often for a combination of a pin bar and then in a bullish case maybe two supporting candles, or in the bearish case the opposite. So very popular with many traders. The indicator, as you've seen it, can be customized to your personal settings, so don't be surprised if you apply to a chart and you don't see the indicator flag absolutely every pin bar that you would see, but I think that's quite helpful, because you can then play around with the settings, and you can make your own definition of a pin bar, and you can refine that, because in trading it is important to be very precise and very clear, and not just assume. So you can be very precise in terms of how many pips long should a wick then be to qualify as a pin bar wick, and how big should the body be in relation to that wick, and so forth. So it's often used as a reversal indicator, and I know Paul from his trading, he also uses that as one of the confirming areas, or like one of the confirming factors for a potential area of interest to engage in a trade. But it's not the topic here to talk about specific trading strategies, but just to give you an idea how these kind of indicators can be used in the context of a trading setup.
So here we have the hammer and the hanging man indicator. So they're actually the same candlestick, but it's a different name based upon where it appears on the chart. So at the end of a downtrend, when we see the sort of a buy signal, it's called a hammer, and we expect it to be a buy signal. Remember that Japanese candlesticks are at their heart a reversal pattern. So where we need something to have something for it to reverse. So we have a nice downtrend. We see the hammer pattern, and then we expect the price is likely to rise for the next couple of sessions. Alternatively, when we see pretty much the same candlestick, but at the end of an uptrend. It's called a hanging man, and what we're expecting to see is, it's an indication that the market, the uptrend is on its last legs. The uptrend is about to run out of energy, roll over, and fall away. And so we expect for the next couple of sessions to see an element of the prices moving lower.
And let me just finish the video by having a look at the spring indicator again. Just to confirm that the spring indicator alone is not a recipe for success, but it can help you to identify potential areas where support is being tested as resistance and vice versa. These kind of inverted levels often provide very good levels of interest in my trading setups, and an indicator that can help me spot those is quite helpful. And to bring everything together, so the 4 indicators we've discussed are exclusive to Blackwell Global, and they come with their version of a MetaTrader 4 platform that you can only download with them, and the indicators only will work in the context of this Blackwell MetaTrader platform. If you ever try to just take the code and implement them into another platform, that will not work, because the copyright is with Blackwell, and they have been coded in a way that they only work in the Blackwell trading platform. That does not mean that Blackwell knows kind of how you use the indicators of the settings. There is no kind of link back there to the broker. That can be confirmed. But just these are indicators that are exclusive to this specific broker. And if you want to give them a try and if you want to test them, just download the demo platform, and they will be available. If you have any problems with the indicators, if you can't find them, please don't hesitate to reach out to the ladies and gentlemen at Blackwell. We'll be very happy to help you with that. So thank you very much, Paul, for your time.
Very welcome, Malta. It's a pleasure.
I hope the video has been helpful, and hope you also have a look at the other videos and join us for the upcoming webinars. Thank you very much.